If you want to go from this to this in your property investing, then keep watching. Have you ever felt like it's so difficult or you're very confused about how to pick the right property that'll make you money much quicker in years rather than decades to get you financially free? Then this video will answer all the problems that you may have and the 3 top things to look out for in a property to help you speed up your wealth creation journey much quicker so you can quit that job, buy the stuff that you always wanted, and most importantly is give you the freedom to really enjoy the life you want. So let's get right into it. So one of the most important things to look out for in property investing when selecting the right one, and what I use, is ensure that your property has a strong land component. Now, why is that? It's because the land in the property is what appreciates in value, whereas the building depreciates. And I'll give you a very good example. The worst performing assets that I've seen in the market, and especially hearing from family friends to friends, is brand new stuff, like brand new off the plan apartments or house and land packages. You probably know someone who's bought a brand new apartment and they've outperformed. Would you agree? And I'll give you a perfect example. If you bought a property, a brand new apartment in Docklands in Melbourne, the median house price was around $598,000 10 years ago. So back in 2012, that's when it was built. And if we fast forward today, 2022, another 10 years, guess what? You virtually had no growth for 10 years. Now, why is that? It's because when Dockland was built, there were so many apartments that's gone up at the same time. And guess what? That means there's lots of supply. More supply means lower prices. So that's basically a simple demand and supply equation. So remember, do not buy brand new apartments or house and land packages because they tend to be in areas that lack scarcity, and also they tend to be in an oversupply or an abundance amount of properties for sale, which means lower prices for your property. So avoid brand new apartments, buy property that's got a large land component, and a rule of thumb, a minimum of 60% of the property value should be in the land value. Let's do an example together. Let's say you got a $1 million property and the land value is $700,000. So let's say it's valued by the land general in New South Wales, for example. That means your land value component is 70% because $700,000 of $1 million. That means the remaining $300,000 you've paid is for the building itself. So that's a very good land to asset or land to asset ratio. So basically make sure that you have a land to asset ratio of about at least 60%. If you're buying a townhouse or an apartment, maybe 50% is the lowest I'll go. But anything below 50%, you start to pay more for the building, which depreciates, and more for the less for the land that actually appreciates. That's why brand new apartments and brand new properties in general, I will probably never recommend it for any of my clients or friends, simply because you're paying so much for the building, which goes down in value. It's like buying a brand new car, and so little that goes towards the land component, which actually goes up in value. So make sure you buy a property that has a high land to asset ratio. Aim for roughly at least above 60%. Now, the next thing to look out for an outperforming property is make sure the area around the property doesn't have any future supply of housing. What does that mean? Let's pick an example. Point Cook in Melbourne, so the western parts of Melbourne, it's got an abundant supply of land, like empty paddocks, which gets developed into new housing estate. Now, what does that do to property prices? Going from my previous point about supply, write this down. Supply is the enemy of capital growth. Supply is the enemy of capital growth. We don't want you to buy a property in an area and then next year 22,000 properties or of the same type of yours just goes up out of nowhere. That's what will reduce your price, because remember, more supply means lower prices. We want more demand and limited supply. That's what generates capital growth. So when you buy in an area, just do a quick Google aerial view, just like this one I'm showing right now in the picture. Are there empty, farmland or just random vacant land which can easily for a developer to come in and build new stock on it? Because if there's a highly chance that in the future there's going to be new stock. So make sure you buy in a suburb, for example, where there's no future available supply of land. very, very, very important. So make sure to write that down. That's why I would never recommend anyone to buy brand new house and land packages, because that is actually part of the new stock that developers are basically selling to you. And guess what? It's usually in an area where there's multiple 50, 100, 200 same properties around your area, and that's all looks the same stock, which means more supply and again lower prices. So make sure you buy in an area that's more like landlocked. There's no future release of housing. Now, another awesome tip I want to give you to find that outperforming property is make sure it has owner-occupier appeal. Because here's the fact about the property market. 70% of the market, the housing supply in Australia, is owned by owner-occupier, which means the person who owns the property lives in it as their residence. Whereas 30% of the properties in Australia are renters. Which means if you buy a property that doesn't appeal to people who want to live in it, i.e. owner-occupiers, you're only appealing to a tiny 30% of the market. That's why, again, going back to my last 2 points, brand new apartments, cookie cutter, house and land packages, service apartments, studios, tiny studios. Do you think a family or a person who wants to live and raise a family, do you reckon they want to live in those kind of properties? No. That's why they always have outperformed in regards to capital growth, because it's less demand for it. And another one is defense housing. That's all built to tailor for the investor, the people who want to make money. So when you buy a property, those who tend to outperform, they have owner-occupier appeal. So I always put like an owner-occupier hat on when I invest. If I had a family with kids, why want to invest and live, well not invest, but live in this property? Because if I do, then very likely other people also want to live in there as well. So make sure that your property has owner-occupier appeal. So you're appealing to more of the market, at least you appeal to also renters and owner-occupiers. So rather than appealing to 30% of the market, you're appealing to basically the 100% of the market. So that ramps up demand for your property, and which means that you have more likely chance of outperforming the market in regards to capital growth. So what's more important than picking the right property and finding the owner-occupied pure property, avoiding the brand new stuff? What's more important to that is actually your foundation in property investing. So when you imagine a big tower, if the foundation of a tower is shaky, it's not right foundation, then guess what? The whole tower will probably wobble and topple over. So most people actually build their property portfolio without a solid foundation, i.e. a property strategy and also a finance strategy. So if you haven't watched this video, which is coming up above right now, I highly recommend you look at that first before considering my 3 factors which I've taken into account in this video. So make sure you click on that video to watch the next video. That will actually be the most important video you watch before you start investing.